So a month back, NSDL or the National Securities Depository Limited said that they were planning to go public. And since a lot of you have asked me to cover the IPO and analyze the company, I thought I could do a quick video explaining a few interesting things I found while studying the IPO. And like always, please leave a like or a comment so that we can please the algorithm gods and hope that it shows this video to more people. And if you like the stuff that we do on this channel, please do subscribe as well. It will mean a lot to us. With that introduction out of the way, let's get to the story. The 1990s was a wild time in the Indian equity market. Very few people cared about investing, and those who did frequently broke the rules. The number of scams that rocked the capital market ecosystem in that decade completely changed the industry. And it wasn't just the Harshad Mehta scam. There was also the infamous controversy surrounding duplicate shares of Reliance. At one point, the Bombay Stock Exchange suspended all of Reliance's trading activity, suspecting that they were deliberately duplicating shares. And investors also routinely raised complaints about bad delivery, meaning buying a share and then finding out that the certificates delivered were totally bogus. In 1995, the government realized that it needed to do a few things differently. First, it had to introduce electronic trading. Floor trading had to go. It was inefficient, it was time consuming, and luckily for the government, the National Stock Exchange or the NSE pioneered this shift. Second, we needed better risk management. If somebody bought a share, then you needed an independent agency to confirm that the buyer has enough money to commit the transaction, and you also had to make sure that the money reaches the seller once the transaction is settled. This job fell to the clearing corporations, and suddenly fewer people defaulted on their obligations. Finally, you had to do something about the duplicate share business and the hassle of maintaining and transporting physical share certificates across India. You needed a central agency that could digitize all shares or dematerialize them and maintain a record of each share and who owns it, who transferred it, etc. You needed somebody to do the bookkeeping, and NSDL or the National Securities Depository Limited became the first company to take up this role. The government also realized that these are critical institutions, and if somebody came to control the entity completely, that could be detrimental to the entire capital market ecosystem. So they allowed for competition, and in 1999, CDSL or the Central Depository Services Limited became the second company to perform exactly this function. In summary, both NSDL and CDSL make up the entire market, and together they form the depository institution in this country. But this is not the 1990s anymore. This is 2023, and a lot has changed since then. NSDL just doesn't deal with maintaining and settling securities anymore. They do a lot more. Let me give you an example close to home. So at Ditto Insurance, we sell health and term insurance policies. And if customers wanted to electronically store their policies, they can do so by creating an e-insurance account. And guess what? NSDL also provides an insurance repository solution to make this happen. They also offer e-voting services. So if you held a share of Infosys and Infosys asked shareholders to vote on some matter regarding CEO compensation, then you can electronically vote using their services. They also have subsidiaries that do some very interesting things. One of their subsidiary, NPBL, owns a payment bank license, and as a payments bank, NSDL can accept demand deposits of up to 1 lakh, distribute mutual funds and insurance products, and also enable remittance services. And there's something very interesting here as well. After 5 years of operating as a payments bank, you can apply for a small finance banking license. And if you get a small finance banking license, you can open up a big revenue stream, lending. And here's another interesting fact. NSDL began operations as a payments bank in 2018, meaning in October 2023, they will have completed 5 years of operation, which would theoretically enable them to apply for a small finance bank's license. And that's not it. They have another subsidiary called NDML that offers database management services. This forms a tiny percent of their revenue, but this subsidiary recently acquired an in-principle approval from the RBI to operate as a payment aggregator. This could once again open a new line of revenue, as the company will be able to collect payments from customers and transfer them to merchants. So NSDL isn't just a depository service anymore. It's a diversified company with many business interests. And that brings us to two questions. Number one, should we then evaluate NSDL as a depository business? And number two, if not, how should we evaluate the company? Well, let's look at the numbers. As of FY 2023, 40% of the consolidated revenue came from the depository business, but about 50% of their revenue came from banking services in the same year. And that's not all. The share of banking revenue inside the company's total revenue mix has increased dramatically. If you look at banking's contribution to the total revenue, you'll see that it has gone from 13% of the total revenue to 52% in just 2 years. That is a substantial increase. But despite this increase, I would still like to evaluate NSDL as a depository business, because even though banking is contributing to the top line, it's not doing a lot to the bottom line. I will read out a line from the company's draft red herring prospectus, or the DRHP, to illustrate this point. It says, the payments bank business involves high operating expenses leading to a high cost to income ratio. In simple words, they're saying, look, we have to spend a lot of money to keep running this business, and so our margins are negligible. In FY 2021, the operating margin was actually negative 20%, and 2 years on, it is still languishing at 1.49%. So while the margins have improved, there is still a long way to go before it starts making meaningful contribution to the company's profit and loss account, which means the bottom line is entirely padded up by the depository business. Within depository, you have two kinds of revenue streams. You have the annual and the custodial fee, and then you have the transaction fee. But before I explain this better, let me first talk about how a depository actually works. So usually what happens is a depository like NSDL won't work with investors like you directly. Instead, they will work with a depository participant like a stockbroker, and any customer that enrolls with that stockbroker will end up using the depository service that the company partners with. So if you've ever opened a trading account, you know you have to open a demat account as well. This demat account is maintained by a depository service like NSDL. So if NSDL can onboard many stockbrokers or depository participants, then they can add more investors who will each need a demat account. The more accounts they keep adding, the higher the annual and the custody fee. And this is a highly predictable line of revenue, because so long as the depository participant doesn't switch, the money will keep flowing. The transaction revenue, however, depends on the general investing climate. If there's a lot of marketing activity, there will be a lot of shares changing hands, and NSDL will end up making a lot of money. If things are a bit muted, then the transaction revenue drops. And as you can see, between the years 2022 and 2023, transaction fees largely remained flat, perhaps because of the investing climate. But when you look at recurring revenue, which is primarily custody and annual fee, you will see a steady growth simply because NSDL added more demat accounts each year. So ideally, I would look at both numbers independently and not just look at revenue from depository services as a whole, simply because recurring revenue is always better than transaction revenue. Another thing you have to remember is that NSDL can't charge anything it wants. The fee structure is highly regulated, and so they don't have a lot of wiggle room here. But despite this, if you look at the operating margins on depository services, you will see that it's consistently at the 50% mark. So half the money they make here goes directly to the bottom line, which is why I said I'm still going to look at NSDL as a depository business despite all the new revenue coming in from the banking business. And now that we have a good idea about the various ways in which NSDL makes money, we can finally look at the financials. Their revenue from operations more than doubled in the last 2 years, as you can see in the graph. But since half of this came from the banking channel, where margins are still pretty slim, I would advise caution. Total profits, meanwhile, moved from 188 crores to 234 crores between 2021 and 2023. So despite doubling revenues, profits have grown by just 11 to 12% each year, which is not bad at all, but context matters. However, while the financials look pretty fine, the biggest problem for NSDL is actually the competition. And even though there's only one company competing with NSDL, it's still a big problem. For instance, there was something I found very interesting when I was reading the DRHP. It's that NSDL talks about how it missed the bus with new age fintech brokers. About a decade ago, Zerodha, India's biggest broker, decided it was going to opt for CDSL as a depository service. And since then, pretty much every new age fintech broker has chosen to partner with CDSL. I don't know why this is the case, but it seems to have had an impact. Look at the share of NSDL's transaction revenue when compared to the total transaction revenue generated across the industry. Between FY20 and FY2023, their share has declined from 58% of the total revenue to 44%. Even the annual and the custody fee, which is what usually NSDL dominated, has dropped from 63% to 52%. And if this continues, then NSDL will have a problem on their hands. Also, since this is a note on the IPO, we have to talk about the valuation. For now, NSDL hasn't confirmed anything about the actual valuation they're seeking, but reports seem to suggest that they're thinking of valuing the company anywhere between 15,000 to 17,000 crores. Even if I assume the lower band of 15,000 crores, it still seems like the company's P by E ratio will add up to about 64. For context, currently CDSL is trading at a price to earnings multiple of about 46, which is pretty expensive already, even if both companies are operating as a duopoly. Now, is NSDL justified in seeking a higher valuation considering all the new potential that could emerge from the banking and the payment aggregation business? Well, I don't know. This is a highly regulated industry, and anytime I'm investing in a stock whose business is highly regulated, I'm always cautious. So yeah, that's a quick roundup of the NSDL IPO. I just wanted to give you a brief understanding of what NSDL does and how its prospects are shaping up. And if you want to read more about the IPO yourself, I've also made a video explaining how to read the DRHP. You can follow this guide to understand NSDL IPO or any IPO for that matter. And like always, like the video, don't forget to share it with your friends and family, and let me know your thoughts in the comment section also. I will be reading them very closely. That's it from me. I will see you next time.